What do you think the three biggest downside risks are to the stock market right now?
Oh, that it doesn't go up. That no.
But that's actually an in-depth answer. You might want to
I
elaborate
know.
on
Well,
that.
that's actually part of the, that unfortunately is part of the problem, right? So, look, the risks that I'm concerned about is that we enter into a recession, we start to see unemployment, the flows into things like retirement funds begin to reverse more sharply. And, for what appears to be no reason whatsoever, we end up in something that looks a little bit like a China situation where money just kind of drips out, right? So it turns into effectively a slow bleed. I think we've gotten used to the idea that, the market has to crash, right? It's directly ahead of us that the market is going to crash. There are unfortunately a lot of similarities between now and late 1999, early 2000, where the market has narrowed significantly. A very few number of extremely profitable companies are leading the charge. People will often point to this and say, well, it's nothing like the dot-com cycle. Those were all unprofitable companies operating on hope and a prayer. We lived through that. We actually just had that experience in 2021 where we had all sorts of crazy stuff move. This feels like it's just a much narrower version of something along those lines where people increasingly we're seeing evidence that people are basically saying, oh, I get the joke. I just need to buy technology, right? That feels much more like the dynamic that occurred in the aftermath of the 1998 crash in Asia, where people abandoned all the ideas of, I should be invested in energy, or I should be invested in oil, in metals, or I should be invested in, old economy stocks, as we used to talk about them. That gave way to a wholesale rush into technology, and we definitely are seeing elements of that today. And so, the key risk is candidly that an Nvidia disappoints in a way that's not dissimilar to what we saw with Cisco. I think that's one of the reasons we had such an extraordinary bid for volatility around the Nvidia event, the Nvidia earnings event. We actually saw more volatility stacked up into the market for the Nvidia earnings report than we've seen recently for Jerome Powell's speeches, for Fed announcements, for CPI prints, et cetera. Like, this was the thing. And fortunately for the market, Nvidia exceeded expectations. So, a disappointment on that and a change in narrative, I think, becomes the thing we should be watching for.
How does passive play into that?
Well, passive amplifies everything, right?
Yeah.
Because the traditional way it would work is an active manager. Let's just, let's pretend it's Cathie Wood. This is actually a good example, right? So the ARK investment ETF owned Nvidia shares. As the shares of Nvidia went higher, she made the discretionary decision that it was overpriced, that there were better opportunities to invest elsewhere. And as much criticism as you may lob at somebody like Cathie Wood, like, that's a normal human reaction to say, well, the price has risen a lot in the absence of anything else changing. That means my forward expected returns have to be lower. And therefore, I'm going to sell some shares, creating liquidity in the market, right? I'm providing liquidity for those people who want to continue to speculate and push it higher. The problem is Vanguard and BlackRock, the passive investors, or State Street, others who play in that game, there is no mechanism for them to make that discretionary choice. The only way they'll sell Nvidia is if you fire them, and then they will sell in proportion to the market capitalization. But otherwise, there's no scenario under which they think the price is too high. And perversely, in fact, as it goes higher in price, the next dollar that comes in buys more of Nvidia than it does of the rest of the market because it's outperformed the market. And so you get these positive feedback loops that can cause prices to rise in a manner that is, again, similar to the dynamics of 1999, where we decided to throw valuation out the window and focus on metrics like how many eyeballs did you see? Forget how profitable you were, how many eyeballs did you see, right? In the case of Nvidia, like, anyone looking at their results has to say this is one of the most extraordinary reports we've ever seen. We're seeing a company that was already a sizable player in US technology markets and the global semiconductor markets has now become one of the fastest growing companies in history and is expected to continue to grow. But some of the staggering statistics that come out is that Nvidia didn't spend any more on sales, general, and administration on basically a $10 billion sales jump it's really extraordinary when you think about that. Did they not have to compensate their sales force, et cetera? I mean, it's really something we've just never seen before.
Mm.
Um, Whether that continues to be the case, I think, is ultimately where the bull and bear case rest, right? When we think about something like Apple, which had a similar period of growth from 2007 through 2015 with the growth of the iPhone and then the iPhone 5, that growth was all going directly to consumers, which is a dramatically larger market, right? It's the end market. And that growth was about half as profitable as the Nvidia growth that is being forecast, or it really has actually been realized in the last in the last earnings report. And it's expected that that profitability is going to continue going forward, creating just numbers that candidly defy the imagination.
Yeah, yeah. I did a video earlier today that 28% of the S&P 500 gain over the last year, I believe, was just strictly due to Nvidia, just the price. And people talk about the Mag 7, but this article on Barron's pointed out that now it's really just the Mag 4,
Right.
because
Well,
those
and
others
that's the narrowing
are
of the
actually going
market.
down.
Right. I mean, I'm looking at markets today, right? And if I look at the factors that are working, I mean, this is just one of these crazy things, right? The momentum factor is up 3% today, while the S&P has barely moved, right? It's again, very, very similar in terms of its underlying construction. If I think about value, value is now down on a year-to-day basis. We're all supposed to be value investors, right? We're supposed to be thoughtful investors. Momentum strategies are up 25% in the first 2 months of the year, and value is down 4.
Mm, right.
Right? The median stock is down something like 4 to 5%. I mean, this is just an insane component. And by the way, you talk about Nvidia's impact on the S&P 500. Almost more extreme are things like the performance of SuperMicro, which it really is just a company that builds things that include Nvidia chips. They do so at relatively low margins, and their gains account for the gain in Supermicro is the only reason that the Russell doesn't look absolutely awful on a year-to-date basis.
Wow. So it's just this like this trickle down effect, so
Did I
to
lose you?
speak. It's not just Nvidia. It's everything that's
Trickle
attached to
down or bubble up, however.
it. Yeah.
Yeah, I'm not sure whether I would call it trickle down or whether I'd highlight it as bubble up, but I mean, this is one of these really extraordinary situations where we just have to ask ourselves candidly, like, what is ultimately being priced in here? And I can create all sorts of narratives, right? I mean, that's one of the specialties that we have as human beings, is creating narratives that explain why things behave the way that they behave. In the case of Nvidia, we're somewhat correctly responding to the actual fundamentals, but then also creating a story for why this is going to continue, right? And I mean, the easiest story is just that you're now actually trapped in something that resembles, a death cage match, where the first person or the first corporation that gets to a truly viable artificial general intelligence theoretically could change the world, right? And if that's the case, like, what would you pay for the last nuclear shelter ahead of nuclear Armageddon, right? The answer is I would give every penny I have to get inside that nuclear shelter, because among other things, actually maybe not pennies, but certainly scrap dollar bills, right? Because we know those are not going to have any real value in the world that comes after that. And so what is the price that is too high? Now, I don't actually believe that. I think that, what we're experiencing is a bubble that is increasingly facilitated by the dynamics of passive investing, as I highlighted. But the narrative is compelling, right? Nothing
But
is
the
nothing
narrative's
is
always
more.
compelling, Mike. It's always
That's
compelling.
there is always a good story. That is what people get paid for.
Yeah. I don't know much about AI at all, or at least kind of how it works. I've used it and whatnot, but I've heard that the GPUs from Nvidia take quite a bit of energy. So is there a limit to how much Nvidia can grow based on how much electricity we have access to right now?
So I think the answer is that we don't know. We do think that there are limits around that, both in terms of the density of processors that can ultimately be achieved, alongside similar issues, around the actual availability of power. But this is the same debate that we've gotten into in Bitcoin and everything else. And the simple reality is that digital computation is exploding in its energy demands.
Yeah.
Really no different than, if you think about it from the context of, well, this is what they eat, right? And so as human populations exploded, the demand for food exploded, right? The demand for human foodstuffs exploded. That's why domesticated animals outnumber wild animals now, roughly I think it's like 95 to 5 or something like that.
Mm.
I would expect that we're ultimately going to see something very similar here, where we have to figure out if we require artificial intelligence, if we actually require these products to allow us to make that next stage of productivity gains and next stage of wealth creation, we'll figure out how to get the power going. And this is, that's a net positive, right? Let's, take the Bitcoin argument that like, oh, we're facilitating the creation of, base load power or opportunistic usage of stranded assets, et cetera, so we can access stuff at a really low cost. This is really no different. It's just saying, let's start investing in baseload, right? Let's figure out the best ways to increase the quantity of food that is available for our robot overlords.
Yeah. Right.